some of the problems at the end of Chapter 10 I thought were worth taking a look at. And of course these are found in Cengage now. So one of the problems says that Pierre, as a cash basis unmarried taxpayer, had $1,600 of state income tax. I'll make this a little bit bigger. During 2018. Also in 2018, he paid $455 that was due when he filed his 2017 state income tax return, and made estimated payments of $975 toward 2018. Now, since he's a cash basis taxpayer, we're going to look at all these amounts, and we're going to look at when they were paid, and that will be the amount that will determine the amount of his 2018 state income tax deduction. Well, in this case, since they were all paid in 2018, we'll add the $1,600, and we'll add the $455 and the $975, which, using my numbers, your numbers will be different, but the approach would be the same. In this case, the state income tax deduction is $3,030, just by adding the three together. Part B, he did receive a refund of $630 in 2019. Well, since he itemized and took advantage of the full 30/30 back in 2018, he got part of this 30/30 back, that is $630 worth. So he has to report this then in 2019 in his gross income. Had he not itemized and nor taken this deduction last year, then the refund would not be taxable in 2019. But he did itemize, so part of this 30/30 has to be reported as income in 2019 since he received a refund. Another problem that is in Cengage now is one that states that Norma is single and uses a cash method of accounting, lives in a state that imposes an income tax. In April 2018, she files her state income tax return for 2017 and pays an additional 2017 in state income taxes. During 2018, her withholdings for state income tax purposes were $6,720, and she pays estimated state tax of $1,344. Again, when this was paid is most relevant. Very similar to the previous problem. Your numbers, of course, will be different. So I just added all the amount that was paid in 2018, and that is the total that she'll be able to deduct as an itemized deduction in 2018. For Part B, assuming Norma itemized deductions in 2018, which totaled $27,700, how will the refund of $34.56 that she received in 2019 be treated for federal income tax purposes? Well, using my numbers, and I'm going to change this because I did change the refund in Part B to $3,500, so just to be consistent, I'll change this to $3,500 as well. All right, so we have the $3,500 refund, total itemized deduction of $27,200. What I did is, question, of course, is how much will be recognized in income of this refund the following year in 2019? Well, the amount of the deductions far exceeds Norma's standard deduction of $12,000 as a single person. So therefore, the entire $3,500 would be reported as income because the incremental benefit of itemizing was greater than the refund. And the incremental benefit, of course, is $27,200 minus the $12,000 standard deduction that she was entitled to as a single person in 2018. So the full amount of the refund is recognized in income in 2019. Part C, assume that Norma itemized deductions in 2018, which totaled $20,000, and she elects to have and we'll change this back to $3,500 refund applied toward her 2019 state income tax liability. That doesn't change really anything. So the amount of dollars then that she'd report would be the same of $3,500. It really doesn't change anything here. Now, Part D, assuming, and I mentioned this earlier, that Norma did not itemize deductions in 2018, well, since she never had the benefit of deducting the state income taxes paid, any refund then would not be recorded as income. So in this case, she doesn't have to worry about reporting the refund as taxable income. And again, she looked back at last year, and if she didn't itemize, and she gets a refund in the following year, then she wouldn't have to. A refund on that standard deduction taken, there is no income reporting consequences there. In the next video, we'll cover additional problems in Chapter 10.